Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 1st of December 2024. Just 4 weeks to Christmas. And we're covering last week's financial update, highlighting why gold and silver fell back, marginally recovered towards the end of the week, and what we perceive is likely to happen this coming week and in the weeks ahead. Do not write off gold and silver because crypto and equities are surging. But equally, do not feel that over the short to medium term, their prices are going to explode either. A lot can happen, a lot will happen, and we will cover it all. Let's take a look. Now, before we look at what happened last week, just a brief reminder that we have a sister channel entitled Finances Do Matter. We shall be changing much about that channel from January the 1st, and so if you haven't subscribed, please do so by following the link in both the description box and comments section. Let's now get back to the financials. Gold fell $66 last week, falling from $2,716 to $2,650. Having hit a high of 2,721 and a low of 2,606, a fall of 2.5%. Gold spread between high and low was $115. Last weekend, we said gold would trade between 2006 and 2008, with 2,650 being the bottom of the normal trading range, which is where it closed, and 2,600 being in outlier territory, which is where it attempted to go in late trading on Monday. In sterling terms, gold fell £88, closing at £2,083, and in euros it fell €108, closing at €2,506. Silver fell 73 cents, falling from $31.36 to $30.63, having been as high as $31.56 and as low as $29.71, a fall of 2.4%. So it breached that $30 level, but then resurrected again. The difference between its high and low was $1.85. Last weekend, we predicted silver would trade between $29.50 and $33, but like gold, pointed out that the normal base range would be $30 to $33, allowing for a dip below that figure, which it achieved on Thursday as opposed to Monday with gold. In sterling terms, silver closed down £1 at £24.09, and in euros it closed at 28.96 euros. That's down 1.22 euros. The gold to silver ratio fell very marginally, from 86.6 to 1 to 86.5 to 1. Bitcoin is down $1,000 on the week at $96,600. Equities rebounded again, and most rose around 0.5% on Friday alone. The Dow Jones closed up 614 points at 44,910, the S&P 500 up 63 points at 6,032, and the Nasdaq Composite up 215 points at 19,218. The FTSE Index closed up 25 points. Even the UK market went up at 8,287. Oil prices fell back by 2/3 of the amount they rose the previous week. Brent crude closed down $3.33 at $71.84, and WTI crude closed down $3.24 at $68. And the dollar index was also down a reasonable amount, down 1.82 points at 105.73. Now, unlike the previous week, which was all geopolitical momentum in terms of gold and silver prices, last week it was more data-driven, with a touch of positive geopolitical news thrown in. On Tuesday, we had consumer confidence for November. That rose from 108.7 to 111.7. And new home sales for October fell from 738,000 new homes to 610,000, over 100,000 sold less than anticipated, suggesting a potential slowdown in the economy. Also on Tuesday, the Fed published the November FOMC minutes, which stated that many senior Fed officials said a more gradual approach to cutting interest rates was warranted in light of elevated inflation and uncertainty about just how low they should reduce borrowing costs. They were concerned that inflation remained elevated and the economy was stronger than expected. They also discussed what's known as the neutral rate of interest philosophy, which is the rate that neither spurs the US economy to grow faster nor depresses growth. Until recently, Fed officials thought the neutral rate was below 3%. Now some officials and Wall Street economists believe the neutral rate is possibly well above 3%. The central bank's short-term rate, known as Fed funds, now stand at a range of 4.5 to 4.75%. So this suggests that the US should expect to see less than 1.5 basis points cuts over the next 12 months or so. Now, we stated back in May-June of this year that the Fed should only have one cut in November/December and then possibly another one in January, as we too, from our own assessments, thought inflation was going to be sticky. It now looks as if they will probably cut in November and December. They've already had the cut in November, and not cut in January. But either way, the markets will be disappointed by this news if this comes about. That aside, the economy still appears to be on an upward trajectory, and we have to wait and see how the Trump administration's policies in the months ahead will affect this in whichever direction. Now, on Wednesday, we saw personal income increase for October, rising from 0.3% to 0.6%. This won't be great for what's known as wage push inflation, but positive short-term for the recipients of those rises. But the inflation figures, though concerning, are not dramatic. The PCE index year-over-year rose from 2.1% to 2.3%, moving away from the Fed's target of 2%. And the core year-over-year PCE figures rose from 2.7% to 2.8%. Economists are predicting an additional inflation rise in December. Now, this coming week, we have manufacturing PMIs on Monday, services PMIs on Wednesday, plus the ADP employment report, and the US employment report, otherwise known as the non-farms payroll report, on Friday. It will be interesting to see these figures after last month's downgrade to just 12,000 new jobs. On the geopolitical front, there has been a slight easing of tensions in the Middle East, though the tensions are still problematic, when a ceasefire between Israel and Hezbollah was agreed, but most commentators calling it a respite, not a solution. Now, the movement in gold and silver prices have suggested that there is reasonable support for gold somewhere between $2,600 and $2,650, and for silver, $29.50 to $30 level. There is, however, resistance for gold at $27.50 and for silver at $32. Of course, both support and resistance levels can be broken with any unexpected event or economic surprise. What is interesting to note, and we mustn't ignore this, is that central banks are still continuing with their purchases of gold. So where do we forecast gold and silver this coming week? Well, this week we're expecting gold to trade between $2,600 and $2,700, with $2,575 and $2,775 as outliers. Silver, we expect to trade between $29.25 and $32.25, with $28.75 and $32.75 as outliers. What do you think? Please share your thoughts. Meanwhile, thank you so much for listening. We'd appreciate it if you would give this video a thumbs up, subscribe, press the bell sign, pop on over to Finances Do Matter and subscribe there. Have a great weekend, and as always, a most prosperous week ahead.